continuing from there, we did about 4 transactions. Now, let us look at the 5th transaction out there. It says, if you actually see this, received cash from Vijay merchant $680, allowed a discount of what you call it as discount to Vijay merchant rupees $20. But if you actually see this, there is one transaction which specifically there is, it is in the 4th in this particular 4th transaction we saw that, and then if we look at the 5th transaction, 6th transaction and so on, etc. Now, there is one more basic transaction out here in this particular case. It says that if you actually go back and take care of read this, and if you go to your statement out here, it says that sold goods to Vijay merchant rupees 700, there is another transaction. It says that sold goods, if you look at what you call it as the 5th transaction out here, sold goods to Vijay merchant rupees 700. When it says sold goods to Vijay merchant rupees 700, then what is happening? First thing, sales is happening. When sales is happening, what is happening? Goods are going out of your company. When goods are going out of your company out there, then what happens? Debit what comes in, credit what goes out. What is going out? Goods are going out. I said to sales, what you call it as credit out there, and then it is 700. Now, it says debit the receiver, credit the giver. Debit the receiver, credit the giver. Who is giving, who is receiving that credit from me? Vijay merchant, that is what we call it as debtors, what we call it as Vijay merchant is receiving that credit from you in the form of rupees 700, as I talked to you about earlier. That is debit in this particular case, goods are going out, that is goods are going out in this particular case. If you actually see that goods are going out, that is goods are there, that is your asset is reducing. Please understand, your asset is reducing, goods are going out today. Somebody can go, no, sales means it should be in what you call it as the nominal account principle, because you say debit all incomes and expenditure and losses, credit all income and gain, and sale is an income. Sale is not an income. Sale basically, what is an income? What we are talking about? Profit. When we are talking about gain, is sale a gain? As of now, it is the amount for which you have sold minus whatever is the cost of this particular good is what we call it as a gain. As of now, it is not, this entire thing is not a gain. This is basically sale, that means goods are going out, that is all what I have done. That is, who is giving the credit, who is getting the credit, that is Vijay merchant is getting the credit out there. So, I have taken it as rupees 700 to Vijay merchant out there, that is what basically I have done. I am going back to the previous transaction. In this particular case, initially what was the transaction out there? Transaction initially was basically we said that entire goods was sold on cash, and then it was 700. I am just knocking off the extra, because they, as an example what I talked to you about, that Raghavan sold goods to Raghavan on credit, that is because you are able to see that basic credit part of it in this particular case out here. In this what you see, debit, that is debtors, that is Vijay merchant is debtor for me, that is he is getting the benefit from me. Now, sales, goods are going out, credit out there, that is also taken care of. If I move to the next transaction out here, it says received, I am going to take the next 2 transactions, that is 6th and 7th transaction together. I am going to take the 6th and 7th transaction together. Received cash from Vijay merchant and allowed him a discount of what is called as rupees $20 out there. In the says, it says that received cash from Vijay merchant $680, allowed him a discount, allowed discount to Vijay merchant rupees 20 rupees. Now, what is happening? First and foremost, there is what is called as cash that is coming in, debit what comes in. What is coming in? Cash is coming in, cash account debited rupees. How much is cash coming in? Cash coming in not 700, cash is coming into about to the extent of about 680. Now, who is giving the cash? Debit the receiver, credit the giver. Who is giving the cash? That is, the person who is giving the cash is basically Vijay merchant out there. Debit the receiver, credit the giver. Vijay merchant is giving the cash, that is what you call it as creditors out there, he is giving the cash out there. So, I am debit the receiver, credit the giver. How much are you giving? How much was he supposed to give? If you look at the previous aspect out here, if you look at the previous transaction, how much was he supposed to give? He was supposed to give me $700 out here. How much is he giving me as of now? He is giving me, he is basically, he was willing to give me 700. I have given a discount of $20 to him. So, cash basically I got 680. How much was he supposed to give? He was supposed to give me 700. Why have I written 700? Read the next transaction in this case. Allowed him a discount of $20. That he is willing to give 700. You have allowed a discount of 20. When you allow a discount of 20, what is it for you? Is it an income? Is it an expenditure? Is it a loss? It is an expenditure. It is a loss for you. So, when it is a loss for you, what happens? Debit all expenses and losses, credit all incomes and gains. So, I will say discount given debit $20. So, what happens? He was supposed to pay me $700. He has come with $700 to me. Yeah, out of that I have taken a cash of $680. I have given him a discount of $20. So, as far as he is concerned, the $700 which he was supposed to pay is complete. The transaction is completely closed out there. So, that is where what happens. In this particular case, you see, it is not only the two aspects that gets affected, there are three basic aspects accounted out here. That is, one is discount given or discount given, discount allowed, that is the other name what they will use. There is a discount allowed account, there is given $20, debit what? Debit all expenses and losses, it is an expenditure or a loss, I have debited it. Then there is something cash that is coming in, I have credit, I have basically what have I done? I have debited cash that is coming to my picture, that is $680, and then I have, who is giving this credit, who is giving this cash? Vijay merchant is giving the cash, that is I am receiving money from basically my creditors out there in the process out there, that is basically I have thought of, I am sorry, not creditor, I am extremely sorry out here, it is basically my debtor, I am extremely sorry, my debtors out here. I have received cash from my debtors out here $700 and the matter is issue is over. Now, I move to the next transaction. If I look at, that is I have taken the 7th transaction over, now I am looking at the 8th transaction in the process. If I have to look at the 8th transaction out here, it says that sold goods to Jayasimha rupees 600. Now, what happens? What is the entry in this particular case? You have sold goods to Jayasimha. When you have sold goods to Jayasimha, does it say anywhere that you have sold it for cash? No. It does not say, it just says sold goods to Jayasimha. That means what do we assume? We assume it is on credit. When it is on credit, what happens? When there is a sale, what is happening? Goods are going out. When there is a goods are going out, what happens? Goods account or sales account is basically debit what comes in, credit what goes out. So, what is going out? Goods is going out, I credit, and then what is the amount, sir? The amount is basically to the extent of about 600. Now, what is happening? You have sold goods to Jayasimha. Now, somebody is receiving the benefit of your credit sale. Who is receiving the benefit of your credit sale? The person who is receiving the benefit of your credit sale in this particular case is Jayasimha, that is what we call it as your debtors account or Jayasimha in this particular case, that is he is receiving how much is, that is he has to pay me what we call it as $600. Don't worry about this writing. We have input all these things in an Excel sheet which I saw, which also we will share with you once we finish this. We have input all these things in an Excel sheet it is better more legibly written out there. So, which also we will share with you as we go along in this particular case out there. Next, to move ahead from here, it says that the next aspect, received a check from Jayasimha on account rupees $500, 500. Received a check from Jayasimha rupees 500 out there, that is all what it says. Yeah, received a check from Jayasimha rupees 500. When you receive a check from Jayasimha, what is happening? You have received a check from Jayasimha, something is coming in. Moment you have the check, you are depositing in the bank. What is happening to the bank account? Bank account is increasing. When bank account is increasing, what is the principle what you use? Debit what comes in, credit what goes out. So, what is coming into you? There is what is called as a bank balance that is coming into you, that is what you call it as bank account debited rupees 600, if I am not following, yeah, 500, okay, 500 out here, and then who is giving this? Jayasimha is giving it. What is Jayasimha? He is one of the debtors to me, that is Jayasimha is giving it to me. How much is he giving it? He is giving 500. Somebody will immediately argue, no, he has to give 600, he has given only 500, 100 rupees you have like discount, you have to take discount. Do I have to take that discount? Yes or no? If you actually see this, is there anywhere is it mentioned that a discount of 100 rupees was given to him? Nowhere we have mentioned. He was to pay me 600, out of that 600 he was to pay me, now he has paid me 500, still 100 rupees is due from him, unless until otherwise mentioned. I repeat, unless until otherwise mentioned, it is extremely difficult for you to record it or for you to take as what is called as discount, that is basically take either discount you have received or discount you have allowed. So, in this particular case there is no mention, I am not taking anything with regard to whether it is a discount given or discount given or what is called as discount received or anything. So, I am just saying that I have recorded it as 500, and I will still say that another 100 rupees is still due from Jayasimha in the process. Move on. Next, it says that paid engineer on account rupees 1000, similar, exactly similar. If you go back at some stage, you had bought what you call it as what is called as goods from engineer to the extent of rupees 2000. You will actually see it out here, the last transaction, purchase of goods rupees 2000 and then creditors engineer rupees 2000 out there. Now, what have you done? Out of the $2000 that you basically owe engineer, you have paid him about what you call it as you paid him about 1000 rupees. When you pay 1000 rupees, what happens? Your cash or bank account basically reduces in the process. So, what happens when cash goes out of the business? When cash goes out of the business, when you say cash goes out of the business, debit what comes in, credit what goes out. What is going out? Cash basically is going out of the business rupees 1000. I will say I am using cash and bank both synonymously in this particular case. What have we used? Basically, let us it is on account. When it says in normally, it says that it is paid engineer, that is it says that paid engineer on account. When it says it is paid engineer on account, normally it is not cash. Normally when you say on account and everything, normally we will say when payment is made, we will normally say it is basically bank account out here. I will say bank account, either of it, both are necessary for you. Now, in this case you are paying, that is debit, that is what is a debit what comes in, credit what goes out, money is going out, you have paid over, good. Then what is happening? It actually, if you go back, think a little more, it says that debit the receiver, credit the giver. Who is basically debit the if you actually see that debit the receiver, credit the giver in this particular case out there. In this particular case, is it debit the receiver, credit the giver? Please check up out there if you actually see this. Debit the receiver, credit the giver in this particular case. Agreed. You saw that. Now let me go back. In this particular case, it says, E engineer, that is paid, debit the receiver. Who is receiving the money? E engineer is receiving the money. So what do? Debit the receiver. I will say debtors out there, that is what is called as E engineer is receiving the money, debit the receiver, that is credit the giver. I have debited the receiver, not credited. For me, cash is going out, I have credited what is called as cash out there. Am I with you on this? So far so clear? Now let me move on. If I move on out there, received a discount on payment to E engineer rupees 30. In this particular case, received a discount of on payment to E engineer rupees 30. I should have taken this transaction also together along with it. So that means what happens? You have received what is called as a discount out there. That means what is happening? You have received, you have paid $1000 in cash, you have received another $30 discount. Discount here you have received means what is it? Is it a gain or a loss for you? It is a gain for me. I have received discount, I do not have to pay much. So when I have received discount, what happens? Debit all expenditures and losses, credit all incomes and gains, discount received, credit, I have got $30 out there. Now what is the total money that you owe E engineer? You earlier owed him 2000 rupees. Now how much do you owe him? You do not owe him 1000 rupees, you owe him only 970 rupees. Why? Because 30 rupees on this payment he has given you a discount out there. So how much do you owe him? You owed him 2000 rupees earlier, now you owe him only 970 rupees. Why? Because 1000 rupees you have paid in cash, 30 rupees you have received a discount from him in the process. So that transaction again has what you call it as 3 components out here, as in the earlier case, as what we basically saw in this particular earlier case. In the earlier case what we saw, we receive what is called as 3 components out here. Next, I am going to continue next. If I continue next, it says that bought goods from Subramaniam 900. It says nothing but bought goods from Subramaniam. When I say bought goods from Subramaniam, in this particular case, when you buy goods, what is happening? When you buy goods, what is happening? Goods are coming into your factory, that is what you call it as purchases. How much is the money amount? If I see this amount is about 900, and then it says, it does not say cash, it just says you have bought it. When it says you have bought it, obviously you have bought it on credit out there. When you have bought it on credit, that is who is giving you the credit? Debit the receiver, credit the giver. Who is giving you this credit? Who is giving you this credit? In this case particularly credit, Subramaniam is giving the credit. So I will credit his account out there. Very simple, straight, simple and straight. I have just finished it out there. Next, if I sort of move on from here, it says sold goods for cash to Pataudi rupees 900. I have taken very simple figures out there. Sold goods for cash to Pataudi rupees 900. What is happening in this case? Cash is coming in first, cash is coming in. So debit what comes in? Cash comes in, cash account debited rupees 900. Now what is happening? Sir, who is the giver? Pataudi. Why are you bothered about Pataudi? You have sold goods, you have received the cash, there is nothing due, forget about it, to whom you have sold. Now what has happened? Debit what comes in, credit what goes out. What is going out? That is basically goods are going out of the factory, that is what we credit, and that is rupees 900.
What if this transaction, Pataudi wants to return these goods then?
If Pataudi is, for example, now the question that he has asked me is, what happens? Pataudi has bought the goods and gone. Now he comes back after in 1 hour and says, no, I do not like the goods, I want to return the goods to you. Very simple. What has happened? If he returns the goods, and imagine you are also have a policy of free return, 100% return, 100% you are buying back the whole thing. That is, moment he returns the goods, you buy back and then give him the cash. Then what happens in this particular case? This just gets reversed. Gets reversed in the sense, goods are coming into me, debit what comes in, goods are coming in. That is what I say, sales returns. That is, there is what is called as return of the sale, that is debtors. What is the value? 900. And then what is happening? Another asset is going out. What is the asset that is going out? The asset that is going out in this particular case is cash out there, 900 has gone out. Simple. You might argue, when he returns the goods, I will pay him cash, but I will not pay him entire 900, I will pay him only about 850. Perfectly all right. Then what happens? What is the cat? He has returned goods how much? He has returned goods to the extent of about 900. What is the amount of cash you have given? The amount of cash I have given is only 850. What is the other 50 for you? Other 50 is a gain or an income for you. Am I with you? If it is a gain or an income for you, what happens? What is the principle? Debit all expenses and losses, credit all incomes and gains. That is, I will say, to gain because of sales returns another $50 out there. This is also credit, this is also credit out there. So, what happens? This 900 basically gets taken care of in the process. Am I with you? Are you following? Okay. Now, let us go on to the next transaction as we go along. Please note, when we prepare the income statement and balance sheet out here, we may not use this particular transaction at all, because this is a transaction which we have created as of now, which is not part of our text out there. So, we may not use this transaction, so that is there, but it is okay. As of now, for understanding, it is perfectly all right out here. Next, I would say, if it Patavadi is over, next I will say sold goods to Chandrasekhar on credit ₹400. I have sold goods on credit to Chandrasekhar. When I have sold goods on credit to Chandrasekhar, what is happening? Debit what comes in, credit what goes out, debit the receiver, credit the giver. Please note, there is no cash in it, there is credit sale. Who is receiving the benefit of this credit? So, who is receiving the benefit of this credit? Chandrasekhar is receiving the benefit of this basic credit out here, that is debtors. In all these, Chandra is receiving the benefit of his credit, and then Chandra is receiving the benefit of this, that is how much is he receiving out here? He is receiving goods to the extent of $400. All right, now, what is happening as far as I am concerned? The goods are going out of my factory. So, basically sales, I will say what is called as goods are going out of my factory, then debit the what comes in, credit what goes out, what is going out, goods are going out, and I credit to the extent of about $400 out here. Now, sir, why are you writing DRS next to Chandra? Why are you writing CRS? Please note, debtors, when I say, is a consolidation of all the entities, individuals, etc., who owe money to my company for the purchases that they have made. So, all these will be grouped under the broad head what is called as debtors in the balance sheet when we write about. As of now, we will maintain individual account Chandra, Subramaniam, etc., but when we prepare a balance sheet, we will group all these together. That is where I will write as debtors, and the same thing what we do with the creditors also. Am I with this? Then next transaction, I will basically go ahead in this next transaction out here. If I have to move to the next basic transaction out here, it says Jayasimha returned goods to the extent of rupees 20. You sold goods to Jayasimha on some particular thing, that is, you sold goods to Jayasimha for $680 out here. Somewhere I said sold goods to Jayasimha for $600. Now, what is happening? Out of the $600, he is getting back to me $20 worth of goods. So, what is happening? Sales has happened. In this case, goods are coming back. When it is coming back, sales returns. That is, goods are coming into my factory again. It could be, you might say, oh, it is damaged goods. What is the value? As of now, it is damaged, not damaged, etc. I will assess it later. as of today it has come into my factory. What is the value of the good that has come in? The value of the good that has come in is $20 out there. Debit what comes in, and then it has come in, and then I have recorded it as $20 out there. Now, are you giving cash for this? No, because Jayasimha himself has bought and he still owes me money. No, debit the receiver, credit the giver. Who is giving these goods to you? These goods are being given by what is called as Jayasimha, or in short what we call it as debtors out there, to the extent. What is the extent? To the extent of about $20 out there. Jayasimha is getting these goods back to me. He has given the goods back to me. So, I have basically done what you call it as Jayasimha's goods, sales returns, that is goods are coming from Jayasimha, $20 is what I have basically recorded in the process out there. Now,
Will there be another journal entry that's for sales returns?
Sales returns I have taken, no, straight away.
So, like where that account will close? That will close at
Sales account is separate, sales returns account will be separate. When we prepare the ledger account, you will know that sales account will be different, sales returns account will be different, but when we write in the P&L statement or the balance sheet P&L statement, we will say net sales, that is sales minus sales returns, we will write net sales, but as of ledger account we will keep the account separately, do not worry about it. When we do the ledger account, we will see this. Next, returned, because today, as far as today is concerned, this particular code system, we will journalize this 20 transactions out there, then again we will come back and do the ledgering, and then the so on and so forth out there. Returned goods to E engineer rupees 100. Now, how much you owed E engineer bought, if you look at out here on one of the earlier transactions out here, I think somewhere you bought from E engineer, you made purchase of 2000 rupees worth from E engineer, then out of the 2000 rupees you have cleared off dues to the extent of 1030, that is only 970 is left, and then now you will actually see that another 100 rupees worth of goods you are returning. When you are returning goods, what is happening? Goods are going out of your factory. When goods are going out of your factory, what is the end? What happens? Debit what comes in, credit what goes out. So, what is going out? Goods are going out of the factory, but is it a sale? It is not a sale, because we can't write it as sale out there. So, what is happening? Whatever you have purchased is getting out of the factory. So, I will write it as purchase returns credited, because there is goods that is going out of the factory, and that is nothing but purchase returns. Purchase returns or returns, RETURNS, returns out there. I have the Excel sheet which I will show you, where it is more legibly written, most of these things. Purchase returns $100 are there. Now, what is on the what is it to be debited? You had, that is debit the receiver. Who is receiving these goods? E engineer is receiving these goods, that is my creditors, or what we call it as E engineer is receiving these goods, and how much is he receiving? He is receiving to the extent of about $100 out there. That is what you call it as my creditor. Earlier I owed him 970, now how much do I owe him? Because I paid out $100 worth of goods, I need to pay him only about $870 out there. Now, that is what it is reducing. That is, who debit the receiver, credit the giver. Who is giving? Debit the receiver, credit the giver in this particular case. That is, in this particular, who is receiving? Debit the receiver. Who is receiving? E engineer is receiving, debited. Goods are going out, purchase returns, that is $100 out there. Okay.